pretty dramatic music, but fairly apt. I mean, we had some pretty dramatic moves here on Friday. So, and I definitely wasn't positioned for it. Sort of caught me off guard a little bit. Uh, the size and the speed of the move, especially in the dollar yen and the yen crosses. And usually when I'm wrong on nearly every view I have, and that's just because of the way I trade. So, the way that the markets interact and, the sort of intermarket analysis I do, I generally don't, have positions or that sort of one goes one goes up and one goes down at the same time. Um, and so, you know, what I was positioned for was US dollar strength, especially against the Canadian dollar, especially for the dollar yen, euro yen. Uh, Now, I didn't get into terrible levels, but definitely let the market run way too far against me. And the selling Aussie on rallies idea, I mean, I did do that trade on Friday. I did get a nice entry, and then I've closed out since, but I'm really not reading the market that cleanly at the moment. I've got to get US dollar bearish, and I need to get bearish like 48 hours ago, right? It's just, I'm one of those. If I didn't feel it at the beginning, I'm like, well, is this real now? When really the price action is telling you that it is quite real. So the change in tune after that weak GDP number started with the FOMC as well. Now they're really pricing out a lot of these rate hikes this year, and it's going to be hard to get that back. At the same time, you've got some strong PMIs coming out via Europe. So euro is doing well, and the dollar yen is just not providing any support. Now, when dollar yen is falling and euro is rallying, it's really hard for the dollar to do well against some of those other currencies. Now, Aussie has sort of rolled over a little bit, and the pound has sort of rolled over a little bit. So at least I'm expressing my conviction through some of those decent trades here. So I do have short pound and I do have long dollar CAD. Again, mainly because oil is weak, continuing to be weak, and although the correlation has broken down between Canadian dollar and oil, I don't think it's going to break down for too long. I think it was more just that squeeze against the US dollar that got the Canadian dollar so strong. And really, I think fundamentally it's on a weak footing. So I don't mind really being long dollar yen. I don't mind being short pound. I do think that the BOE is going to have to come out all guns blazing. There's talk here that there's going to be a rate cut and a stimulus package, some sort of QE or help to get banks lending on Thursday. And I think as the market gets around to thinking like that, because that PMI number that just came out then, manufacturing was terrible. Last week the services, or 2 weeks ago, the services PMI was terrible. So I think there is a very strong chance here that the pound does poorly in the next 48 hours before the BOE. So I don't mind being short the pound. The euro is going to be stubborn. The dollar yen looks like it's going to be stubborn. The thing about the dollar yen though is that the Nikkei is doing quite well, so there is some support. It's just feels really heavy. The rebound today by the Japanese traders was so small that I've sort of chucked the towel in a little. So I'm probably going to take a loss here. And look, it's okay. Potter was talking about before. It's okay to lose some. It's okay to give back some profits. Yeah, but it still doesn't feel good, right? I don't like, I made maybe 5,000 pips last month, and now I'm down 500 pips. So I'm giving back 10% very quickly, to begin the month of August. I'm like, well, this is not great. Not a great feeling to be negative. I suspect that the Aussie's going to be under a little bit of pressure before the RBA tomorrow. Rarely do you buy before a rate cut, right? I mean, there's reasons for them to hold, reasons for them to cut. But when the market's relatively high, then I think the path of the least resistance is down. But I don't think you're going to be buying aggressively before that announcement. So I think the higher is in already for today before the RBA. That being said, when you have a 50-50 rate cut or hold decision, the market's going to move 100 points probably tomorrow, either way. And if they don't cut, I don't know what they can say to not get the market to rally. So you've got to think about it as a two-step process. Not only if they cut or not cut, but also the market's reaction and trend, regardless. So the market does want to rally at the moment. The market wants to rally. The Aussie wants to go higher. So they've got to think about not just cutting, but saying the right things to make sure the market doesn't get bought up on the dip. So they have to open that door up to another cut. Right now, if they don't cut, they have to be extremely dovish. Yeah, otherwise the Aussie's going to be above 80 cents within a couple of weeks. Okay, so they have to be extremely dovish in their statement if they don't cut. If that's if they're targeting the Australian dollar, which is pretty, it's a pretty safe assumption that they are trying to get the Australian dollar to go lower. But they're fighting the market trends. Yeah, they're fighting the market dynamics now, which is US dollar weakness. Yeah, so it's going to be very hard for them to orchestrate this sustained selling. A lot of people are short Kiwi and getting stuck. Yeah, look, if it pulls back to the low 71s, I'll probably be closing any positions I have. If I was short, I'm not short here at the moment. It may get dragged down if the RBA cuts, right? But it will rally as well if the RBA doesn't. So there is going to be some impact on this. Tomorrow, you've got the inflation expectations as well. That's very important for the Kiwi because inflation expectations are so... I mean, the inflation is so low in New Zealand that if they see a pickup in inflation expectations, that may tilt the aggressiveness of the current expectation of RBNZ cuts to be a little less passive, you know, a little bit longer time frame. Currently, there's 2 rate cuts priced in for this year for the RBNZ, but that can change pretty dramatically, and they can be like the Aussie, they can stand pat for a little while. But the Kiwi wants to rally as well, so you know this is one of them dangerous situations where the central banks do nothing. It's going to get pretty brutal on the top side there. But let's just see how that plays out. I don't mind being short pound, long short CAD vibe, being long dollar CAD. I'm gonna stay away from the Aussie. The only trade I have is a limit order to buy Aussie Kiwi on hopefully get filled if they do cut rates. I do think that in the next how the market, I've said this a few times, how the market will work here is that if they cut RBA, then that's fine. The Aussie will get sold, and then we can the attention will turn to the RBNZ, which is coming up next week. And in that scenario, the Aussie should outperform because it is hard for them to cut more in Australia after this one cut, whereas RBNZ's got 2 more cuts coming. So it's easy to see the rally coming through here on the Aussie Kiwi over the next couple of weeks. That's one of my trades for the month, actually. One of the ones I'm most bullish on. Happy to buy at 105, buy more aggressively, you know, 104.30, 104.50. If the market gets aggressive tomorrow, then you can easily see those levels. So where's it else catching me off guard? Okay, so one of the trades I'm in is long Euro Swiss, right, which is fine. And it was looking so great until we reversed. Now we're back at the buy level. All right, I mean, if I wasn't in the market, I'd be buying again here. But dollar Swiss is just shat itself. Look at that. I mean, wow. It's got a fair bit of room to move here on the downside too. So I'm going to hold off buying any more Euro Swiss until we get a little lower. But that one's underwater. Euro Yen's underwater, looking terrible. Dollar Yen just looks like it's going to go down and test, you know, 100 again. So yeah, I should close. In theory, I should close these out, right? I'm just in the mood to gamble a little bit of the profits here from last month. So I think last month net on this account was up 400, so we're down 50. So we're giving back a fair bit, but well, not a fair bit, but 15%. But it's still, I did take a lot of my exposure off, my real exposure this morning on the move towards 102.70. I did cut down my exposure, so I'm less than a lot long on all the accounts, so it's not that crazy. And there is ways here. I mean, look, if you want to know the real reason I'm remaining long, I do feel that there will be some clarification from the Bank of Japan and some over-the-top remarks regarding the stimulus to sort of reverse this trend. And I'm going to use that. I don't think that will be a lasting pop on the dollar yen, but I'll use that as an opportunity to get out of my 104s, 105s. So hopefully we're looking at about a 103.20ish. All right, I'm happy to close out a lot of my trades up there, take that loss up there. So I do think that's coming at some point, yeah. But this is the sort of thing, right? If you let trades run against you, this is the only way to lose a lot of money is when you should close and you don't. Aussie yen, I do not know why I'm long Aussie yen. Some random idea in my head. After the Chinese data today, I closed out my Euro Aussie longs, took some profit. Euro Aussie had a nice little rally in the last couple of days, and I was like, oh well, Chinese data is strong. I'm not going to stick around for any silly moves here from the Aussie. It didn't end up happening, and the Aussie has paired back, so that was a mistake as well. So look, it's sometimes when you're trading badly or you're not in sync with the market, you're either perfectly in sync or you're perfectly out of sync, right? And at the moment, I'm pretty out of sync, bleeding on nearly every trade. It can come back pretty quickly, and I should put some take profits in on that 100-point rally like we're talking about. So we might actually do that right now. Bring that down. So yeah, look, any sort of pop here by more jaw boning, I'm out. Now I'm sitting on the sidelines for the dollar yen and just see how far it wants to go on the downside. That'll be the way I'm going to be playing it next couple of weeks. I don't trust the BOJ anymore. I shouldn't have trusted it anyway, but I don't trust the market's reaction to the BOJ either. All right, so stock markets just continue to be strong, bought on dips. Almost untradeable for me at the moment. Like, I like to trade the DAX, and I like to trade substantial pullbacks. So I'm bullish as well, but we haven't got a substantial pullback just yet. I'm waiting really now for a pullback to at least 101.50, and I'm happy to buy at 101.50. Now that can happen really quickly. The DAX is one of those currencies which can move. It's one of those indices which can move dramatically in a day, and generally it does. It's actually quieted down in this uptrend so far. So yeah, look, when you're losing, right? When you're losing trades, and this happens every now and again to everyone, you have to quickly identify where you're wrong in your assumptions, especially if you're fundamental or sentiment trader, and either trade less, right? So cut down your positions. Or sit in the sidelines until you start to come back in to be in sync with it. Otherwise, it's no good not reacting at all, right? You got to be a little bit active in terms of what's happening in the market. Yeah, you got to change your view, and so there is no place for stubbornness. So in that regards, I'm reviewing my US dollar stance and looking at a lot of the majors there. People coming out now with 117 calls on the euro, coming out with 98 calls on the dollar yen, 135 calls on the pound, 80 cents on the Aussie. And I'm going to have to respect that stuff, right? I have to look at it and see if that's really where we're going. That's the next big move. Because it could be the next big move in the markets, right? US dollar weakness. And you don't want to fight it all the way up. Yeah, that's a beast in the background. That's my old computer. Where is it? So it's gonna be up and running for tomorrow's stream, which will be great because I'm sick of using this old computer. And hopefully we've adjusted our psychology, yeah, tomorrow. I should just close this out. I'll give it one more day, right? One more day, dollar yen, to have a little pop higher, get out, so I don't get stuck fighting the market for too long. Should have closed on Friday. Friday, that market was so weak, right? that rally and then that selling, wiped out a few accounts. A few of the ones that are watching here know who I'm talking about. So it's definitely interesting, right? This change, this US dollar weakness. In terms of how we react to it, I mean, if you're not US dollar bearish, you should just sit on the sidelines until you are, or there's a reason to not be, or play against the pairs which are fundamentally weak, like the pound, or dollar CAD. This is nice little follow through here. And I think what we're going to see is a bit more pickup of the idea that there is going to be a major announcement on Thursday, or just to talk about it. The more they talk about it, the more selling pressure the pound will come. Rightly or wrongly, right? That's just sort of the way the market will work. It's very, very hard to see a sustained rally unless the US dollar takes another huge leg lower, led by, say, the euro, or the dollar yen makes a play for 100. In that scenario, maybe the pound can remain pretty strong, even go slightly higher, 133.50-ish. But a sustained rally pre-BOE is very hard to see. It's even harder to see than, say, the Australian dollar rallying before the RBA, right? The Australian dollar can do that given that its stock markets are strong and China's data is strong, and there's more chance of the RBA actually not doing something. But the BOE, they're going to do something, right? Now I'm not saying that the Thursday that the market's going to crash on the pound. In fact, if it's priced in well enough, you may see a rally after the fact. Because we're not at 150 anymore. We're quite low here on the pound. And next thing after that, I'll be looking about US dollar weakness, right? And playing catch up on the pound. So, yeah, look, it's we'll talk about that on Thursday. We might do a live stream of the announcement and Carney's speech. That could be a little bit of fun. We did that last month. But this time it's going to be more action stations. So, yeah, recapping short pound. Buying DAX on the dip if we get the opportunity. Long dollar CAD are the main real trades going on. And potentially long Aussie Kiwi after the RBA hopefully cuts tomorrow. If the RBA doesn't cut, we still have to get long Aussie Kiwi, but we have to get in what there will be is a shot higher, maybe towards 106.50-ish. And then on the retracement here, I'm looking to buy if the RBA doesn't cut tomorrow. I'm not going to just... limit orders won't work unless you're trading with a... it's just the limit orders is not the way to trade this. You won't get filled properly. Alright, any questions before we go into review of some pretty interesting bank reports as well? Like I said, a lot of these banks have gone very bearish on the US dollar. Oh, let's have a little review. Alright, Goldman Sachs put out a note about the Brexit and the next run in that. Yeah, you're right, Potter. So we're over at Forex Signals if you're watching via YouTube. If you want to ask questions that I can read, because I'm not in the actual YouTube channel there, so I can't see that. It is a very easy market to lose money in at the moment. It's one of the easiest I've seen for a while. When anytime there's a big trend change, or the beginnings of a big trend change, and if we have a weak NFP on Friday, it's on, right? It's on like Donkey Kong selling US dollar for months. It's going to be very hard to be bullish US dollar. And pairs which have been asleep, like the euro, could just wake up again. But just keep in mind some of these dates going forward. So later this year, we've got a few referendums coming through: Austria, Hungarian, Italy referendum. They're small time. The Dutch general election in March 2017 is big, but the really big one is going to be the French presidential and legislative elections, um, second quarter next year. Right, there's some huge stuff going on. Yeah, so there's some big polling by the far right nationalists in France. Any sort of indication that they can win, right? Because they promising to do a general referendum on EU membership. That's what these guys are promising. Um, that would be disastrous. Yeah, that would be a huge selling opportunity for the euro. And exactly when the UK referendum, when the UK invokes the Article 50 is up for grabs as well. And so according to this chart and this bank, they're suggesting mid 2017 they're going to be invoking that Article 50, which then gives them another 2 years to get out. All right, so that's a timeline. It's a little ways away yet, but it's definitely real. Next year, it's going to be what we talk about, right? Fed rate hikes and French presidential elections. All right, so a lot of banks came out today with their RBA previews. Majority think they're going to cut, but a few of them are looking to buy on the dip afterwards. It's the Citibank's beginning opening theirs. So we do have some ISM data later tonight. So ISM from the US, that's a manufacturing data, and so it's good that all the data is released at the same time, right? You get the Chinese, then the French, German, and British today, and then you get the US, just to see sort of where they're at. It's been strong lately from the US. All right, so in terms of the BOE, so they're suggesting 25 basis point cut and a restarting of the QE, the number being 75 billion. Okay, so this is really where you get the beats expectations or doesn't it beat expectations. Obviously, nothing done by the BOE is a huge rally in the pound. Yeah, 25%, 25 basis point cut and QE at 75 billion, probably small downside for the pound. 25 basis point cut, but no QE expansion, probably be a small rally for the pound. And anything 100 billion and over is going to be big selling on the pound below 130. Also, how the market, how they talk about going negative interest rates as well is going to be important. If they talk about negative interest rates, you might get really heavy selling in the pound on Thursday. All right, so there's going to be, in terms of what they're talking about here with the dollar yen, they're looking for more talk from Abe about his stimulus plan. Any sort of disappointment in terms of the size or the speed of implementation, or if they do some fancy accounting, which is not really increasing the spending, then you may see more dollar yen selling. If they ramp it up because the BOG disappointed, if they ramp it up, then you could see some more. Another little spike higher, and I'm counting on that. I'm counting on some form of aggressive new rumor to go through the market, just to get out of some of these stale long dollar yen trades, long euro yen, long Aussie yen. It's a Canadian bank holiday today as well, guys, so it might be not too much movement in the dollar CAD. Alright, so Citibank is one of those banks calling for 80 cents. Not in this article, but in one of the other articles they put out. They just think that the US dollar is going to go down a lot and that in general the world's going to be looking for high yielding assets, and the Australian bonds and Australian assets are definitely doing that. So we've still got one of the high yielding, even at 1.5%, we're still higher yielding than the rest of the the G8. What we did see though this morning is SNB, so the Swiss National Bank, and we saw its president come out suggesting that the central bank was still active inside the Swiss franc, wanting it to be sold. So, they've got your back a little bit. This is why Euro Swiss is not the most dangerous trade out there. Any starting of a trend is going to get some support. So, I'm not too worried about this. This is all the market fell to on a Brexit, right? So there is not much downside here. If you can't get below 106 on a Brexit, that's Brexit day, then very unlikely we're going to break the range to the downside here. We're going to probably more range trading. Any move lower, just watch to see if it comes back up, and then when it comes back up, buy. Any sort of support here, then just buy straight. I'm just waiting here. It seems to be wanting to test the downside a little bit more substantially, so there's no rush. No rush. It's a slow moving pair. This move here from 109 down to 108, it's a relatively aggressive move in this pair. So that's the sort of action you're expecting. But yeah, him coming out already is interesting, right? Jordan. This is Deutsche Bank's key risk conviction trade ideas. Yeah, so they're waiting to see the NFP can really push the euro higher. So these guys have the same similar scenario here, but they're looking for any pop from rumors that the government's going to over-deliver. They're looking to sell into that. They think that any rally is not going to be sustained in the current market. Interesting. Yeah, probably smart, right? Not just close out my longs, but get short dollar yen. Some sort of heresy. I might have to go to fucking church before I do that. I haven't sold dollar yen for a long time. It's goes against some of my trading belief systems, right? But obviously it's a pretty good trade in the current market. I can see the reasoning, right? I can see that going below 100. It freak them out. I reckon it's going to freak the BOJ and the government out if it does get below 100. That will be interesting to see what the BOJ does in any sort of move below 100. But you can't stop it, right? If it comes out a weak NFP number on Friday, it would be really hard to stop it. Alright, so they're talking about 68% chance. I don't think it's that high for the RBA to cut. I can see reasons for them to do it. I mean, they're probably concerned about this rally beginning. I don't know. I mean, sometimes I've been surprised by the RBA, right? The lack of concern or the lack of understanding how the market's positioned. Maybe they're not as savvy. How do we know Glenn Stevens actually is a currency trader, right? He might say, he might think that the market won't go berserk if they don't cut. They're probably underestimating how sort of contained this rally has been because of the RBA. We were on the warpath a couple of weeks ago with the Aussie. So, 80 cents I feel is going to be pretty easy to attain if they don't cut, no matter what they say. So yeah, but I'll be playing that Aussie strength. Remember, I'm playing that Aussie strength against the RBNZ, against New Zealand dollar. They're happy to sell the dollar CAD, the New Zealand dollar, and they've gone neutral on dollar CAD after the oil CAD correlation broke down. Look, I don't know if it's broken down. That's a big call. What I think it has done is that there was a tactical opportunity for dollar CAD to fall because of um, because of the weak US data and the weak FOMC reaction. Right, I think that was just a tactical move lower, and I don't think that, you know, yeah, the oil fell at the same time, and that should have supported dollar CAD, but I think the market was positioned long there, and so it was easier for the market to fall in that mood, sort of like the Kiwi rallying. It was like odd move when the market was so bearish like a week ago when it was below 70 cents. It seems like almost a tactical short squeeze, and the dollar CAD seems like a tactical long squeeze, and so I don't mind it. And I think it's got a lot of, if oil's going to be structurally weak and it's going to be sold on rallies and we're going below 40, then dollar CAD's really good risk reward here. So the long I've got is I've got the long with a stop below 130. Yeah, I'm hoping that oil CAD correlation comes back. So that smashed me actually. I mean, not smashed me, but I took some losses on dollar CAD last week because it just wasn't reacting to oil falling, and it usually does. Alright, so Citibank's very bearish on the US dollar, so is Morgan Stanley. I'm talking about the US yields are falling. Now, US 10-year yields, right? Keeping this in your mind, US 10-year yields haven't gone below 1%, and all those other major currencies have, right? Swiss, BOJ, ECB, all those 10-year bonds around the world are like 1 or negative. And there's been this stubborn holdout from the US 10 years that there's going to be normalization in the US. But the longer and the more protracted this Fed rate hike policy becomes, um, the more pressure these 10-year yields have. And because you're getting 1.5% from AAA rated US bonds, as opposed to 0% from the Fed, from the German bonds, right? There's a bit more relative interest in those. And when people are buying these bonds, that's putting downside pressure on the yields. That's how it works. Buying bonds puts yields down. Now, there hasn't been a capitulation in the US 10-year. There's still a lot of support, between 1 and 150 to 2. It's been ranging between 150 to 2%. And, if it finally gives way and we end up going down to 1% or below, then we're talking about, in that scenario, guys, we're talking about euro going to 130 plus. No, make no mistake about that. That's a huge rally. That's a big sell-off in the US dollar if that happens. And you should be very concerned if you start to hear me talking more and more about the US 10 years falling. It's basically the market capitulating on the long-term normalization of US rates. Instead of pricing in, we're going back to 4%, they're starting to saying, well, we're going to do one rate hike this year, one rate hike next year. And then all of a sudden, it's easy enough to pressure that yield longer. But this can all change pretty quickly at some point, right? But in the current market, and I suppose it will change, it can potentially change after the US elections, and that's something we'll be talking about as well. But in the current market, we're looking at a fair bit of US dollar sell-off, right? If that happens, and then I'm watching that closely because that's beginning at the moment. That's beginning now. Just gonna see if there's any nice little. All right, so this is Exhibit 15. Yeah. What you're looking at there is that 10-year yield starting to fall quite sharply. That's the blue line. Oh, sorry, it's not. It's a differential. That's not the right one. Sorry, guys. Yeah, so there's a huge differential between the EU to US, right? At the moment, it's -1 point. But if that changes, if that starts to rally, then the euro is going to rally. It's a funny chart, actually. That's a all right, but this is basically what this is if the US 10-year starts to fall, then this is an inverted graph. This will start to rally, and what we'll see there is that the euro should follow it. Alright, so I don't know why they put this out. This is the expectation on Euro Swiss to trade at 107 by the end of 2016 and 2017. Well, that's not really much of a move. That's 100 points low. So that's great, guys. Thanks for that. I will go back and read that, though, because I'm interested to see basically how the S&P can weaken the shift with deposit rates already at minus 0.75%. It's true, right? So yeah, no, that's something for me to go back. All right, so that's enough of the review there. Let's just check if there is any. We'll have a look at a couple of the trades. What I'm looking for here is the one that we like to watch, which is the Credit Suisse technicals. I haven't got that out there, but this is Deutsche Bank's trade of the week. Now, remember that they made a bit of money on that Euro Aussie, so let's not discount them too quickly. So they're going to short Aussie yen, but they've got stopped out a lot in the last couple of months, so keep that in the back of our minds too. So their trade this week is to be short Aussie yen. Makes sense if dollar yen's going lower. Makes sense if the RBA cuts. Alright, so they expect the RBA not only to cut, but also the statement and the SOMP, which is a statement of monetary policy, comes out on Friday. It's an update, quarterly update. But also they expect the SOMP on Friday to signal further easing beyond the current pricing. Alright, so that's the reason that they're short. And they've even gone to seasonal effects to try to back that up. And it is true, the Aussie is positioned quite long. Alright, that's interesting. Alright, any questions, boys? Otherwise, we might wrap it up there. I might do a bit of research tonight. Try and get back on the same page as the rest of the market. See how these short pounds go this week. See how this long dollar CAD goes this week. See if we can't get out of that dollar yen on a pop high at some point this week. And also looking for the Aussie Kiwi to buy at some point this week. Yeah, I'm not going to talk about Good Boy in the stream. I think everyone knows that it's too risky, but it is a bit of fun. So you're going to get what you're going to get, right? Big returns and big losses. Alright guys, we'll be back tomorrow. 9 GMT. I'm going to go over what RBA did. We're going to go over our long Aussie Kiwi trade, exactly where we get in. Hopefully they cut, because I do want to get the best price possible. And I think you get a better price if a better situation risk reward wise. If they don't, if they do cut, if they don't cut, then you have the spectre of them cutting for the rest of the month as well in the back of your head. And that can make it harder to trade this later on in the month as we come towards the September rate cut. Alright guys, trade safe.